Good day, everyone, and welcome to the First Take, a special series powered by First Metro Securities, where we sit down and talk with the country's key financial figures, investment managers, and influencers. Today, in our first episode for the year, in our first virtual First Take yet, we are joined by the one and only Mr. Edser Trinidad of First Metro Asset Management, who will be interviewed by our host later on, Ms. Vanessa Galvez. We will be having a very interesting discussion later on, plus an exciting giveaway, so make sure to tune in until the very end of this episode. Meanwhile, please make sure to get first dibs on all our online activities like this one by liking us on Facebook, following us on Instagram and Twitter, and subscribing to our YouTube channel with the handle at FirstMetroSec. We already got quite a number of things to talk about for today, so let me hand over the floor to our host and guest, Ms. Vanessa Galvez and Mr. Edser Trinidad.
Thank you, Cara, and good day, everyone, and welcome again to First Take, this time with First Metro Asset Management's Edser Trinidad. I am your host, Vanessa Galvez. In this series, we have welcomed, among many, ATR's Phil Hagedorn, Philam Asset Management's Junie Banaag, Phil Equities Wilson C. and Miguel Agarao, and of course, past president of FAMI also, Sir Gus Cosio. Hi, Sir Gus, if you're watching. So this time, we would be talking to another giant in the finance industry, Mr. Edser Trinidad, who is the head of investment and research of our sister company, First Metro Asset Management, or FAMI. So just a brief background on Edser. He was formerly with Citibank as director and head of Philippine Equity Research. And prior to that, he was head of equities of Philam Asset Management. He also had stints with SB Equities and Phil Equity Partners, overseeing the firm's research. He completed his degree from De La Salle University, Manila. So should we ask when? Maybe later. He has been in the industry for more than 25 years now. So you do the math. So ladies and gentlemen, I present to you Mr. Edser Trinidad. Hi, Edser. How are you?
Yes, hi. Hi, Vanessa. I'm fine despite of this economic challenges that we're facing.
I know, right? So we'll talk about that more in a little while. So shall we begin with the first question?
Sure.
Okay, so you've been in the industry for a long time now, but I don't mean to highlight that, okay? So how would you differentiate investing then and now?
Well, anyway, I think things have changed. Investors, I think investing right now is easier as a matter, let's say, in terms of the availability of information. I think the transparency of the companies right now is significantly better as compared, let's say, about 20 years ago. And I say because of the internet, investors can easily access corporate information using their fingertips. Unlike in the past, if you really want to get some information, you have to go directly to the SEC.
Yeah. Would you mind telling us what was the PSEI level when you first started working?
I think it was around 2009 level. I think that's yeah.
So can you tell us how you started your investing journey? Do you still remember what was your first investment?
That's quite been a while, but I think my first investment was a property company, but unfortunately it no longer exists. Because after that, after working for a local, I started out my career working for a local Southside broker. And after a year, I moved to a foreign firm. And because of the complexities and the compliance issue, we are being discouraged to invest directly. So,
but you have personally experienced the highs and lows of investing.
Yes. I think for the past 20 plus years, I've seen everything. I've seen all the cycles.
So what would you say to the investor now who is seeing, let's say he invested late 2018, and he's seeing his portfolio 30% or even 50% down now. Do you have any words for that person since you've personally experienced that?
I think it's more of a, this tests one's patience. I think investing, especially in in equities, is a long-term investment. It's like a commitment. Definitely, the equities market has its ups and downs, but historically, our market, despite of the challenges, it's resilient. So for those who have been, shall I say, been crying for the loss of their investment, I think we're still looking at a very, I think, rosy picture in the long term.
Okay.
I think
FAMI also
yes.
Next question. FAMI also manages the FM ETF. So to those who are not familiar with it, can you describe this ETF in 3 sentences, maybe?
Okay, the ETF is just basically like your index link mutual fund. The only difference between a mutual index link mutual fund and the ETF is if you want to invest, you can just buy directly through any stockbroker. So you can trade it through the stock market. That's basically the difference. The main difference between the ETF and a mutual fund index link mutual fund.
Do you recommend buying it now?
Yes, I think again, any decline is an opportunity because if you are a firm believer that our fundamentals remain strong despite of this pandemic, and on the long term, you won't make a mistake investing in ETF.
So how should we expect the FM ETF to perform after this pandemic? What is your outlook?
I think I expect that there should be some recovery by second half, although admittedly on a year-on-year basis, it may still be below on a year-on-year basis. But from where we stand right now, we expect that there should be a healthy rebound. As we expect that, I think for the second and third quarter, we may be seeing still some challenges, but we're still looking at a recovery starting fourth quarter.
Oh, so can we ask you what's your year-end PSEI target?
I'm looking at the level between 6,800 to 7,000.
7,000. Oh, well, from this point up to 7,000, that's already good enough, right?
Yes. Again, for any let's say uncertainties, there's always an opportunity. And for those investors that have bought in 2018, now is the best time to do cost averaging. So if you buy at this level, then therefore your average cost will be lower. Then any potential recovery should basically be benefiting on your end.
So you mentioned those who invested back in 2018. What do you think is the ideal portfolio allocation at this time? What's the best strategy for you? Let's say I'm buying now.
Yes. Well, admittedly, there's no, shall I say, a hard and fast rule for investing. It all depends on each individual's risk appetite. For me, let's say, for those that are starting still investing, most probably those that are the millennials who still have a very long-term plan, then I think it will be best for them to invest in equities, in equity funds. But for those that are basically looking for, let's say, a steady stream of income, or their risk appetite is low, then I may recommend looking at the fixed income fund, or you can mix it up with equity.
Is there an ideal mix? Do you think there's an ideal mix?
Well, I think it all depends on the investment appetite of each investor. I think this is also, the best opportunity, for each investor to go to, any relationship manager who can help them making the decision.
What do you think are the most affected sectors in the Philippines amidst this pandemic? And do you think they would be able to recover?
I think yes. I am quite confident that the industries or the sectors that were badly affected by this pandemic will eventually recover. In terms of question, what sectors or which industry that have been badly affected, definitely you're basically the sectors that property, because of this pandemic or the ECQ, their pre-selling activity for residential units had been suspended, and people are not quite confident of what's going on going forward. But I think if you look at the historical performance of the sector, it tends to bounce back once confidence builds up. Another sector that will, admittedly, all of the sectors will be affected. It all just at a level or up to what extent is the impact to their bottom line.
How do you think would the new normal look like for the Philippines?
Oh, I think in terms of the new normal right now, going forward, we'll be looking at an increase in electronic transactions, as because of the confidence level of going out or fears of infection. People will now start looking at digital means to make their everyday transaction, be it in banking and in retail. So basically, that's a new normal right now, and this is a fine example. This is our new normal. We always have this video conference call. I think this is basically a new normal that will happen, or that is basically happening right now.
You mentioned a while ago that you're expecting maybe a third or fourth quarter bounce in the economy. So what sector or sectors should we start with if we're going to invest now? What would be the sectors that would recover fastest?
Well, anyway, I think right now, okay, for me, I would advise investors to invest in our funds, because we'll just take care of investing. But
saves you the heartache.
Yes, and it gives them some peace of mind that the ones that are investing are basically the person or the guys who really knows the ins and out of the industry. But going back to your question, what are the sectors that will recover? Be recovering ahead? I think it will be the telcos, because of the increase in let's say telecommunicating. There should be an increase in the demand for telecommunication services. The other sector that can also benefit from a faster rebound will be the retail. But by the way, it all depends on how the retail companies will be able to adapt in this new norm. So for those companies that have already step ahead in terms of their electronic business, then I think they have a competitive advantage.
You have, I think, 2 equity funds, am I right? The consumer index and the equity fund.
Yes, that is correct.
What is the difference, or what are the differences of these 2 equity funds?
Okay, so we currently have 2 equity funds. One is Save and Learn Equity Fund. This is basically our main fund, and the focus of this investment is basically to look at the blue chips, the bluest of the blue. If you look at the composition of our investments in Save and Learn Equity Fund, most of our investments are basically are members of the PSEI.
The stable
uh,
company.
the stable companies, the reliable ones. Now, our next fund is the First Metro Consumer Fund, which we can say a more uh, thematic fund. This fund is only invested in companies that has 100% of its revenues directly serves or caters to the consumer market. So for those investors that are looking for something thematic, the consumer fund suits their purpose or their needs because it only invests in the well-known consumer names such as um, Jollibee, Maxis. So these are the companies that every consumer um, knows. So that's basically the main difference between our two funds.
Okay, so let's talk about how you manage these two funds. So far, what has been your biggest challenge in your profession? Is this the hardest part of your profession, or there was something worse?
I think, well, admittedly, this is one of my hardest, hardest or most challenging work that I've faced because I think, admittedly, I came into this company in the middle of the year last year. So it's because any fund manager who comes in the middle of the year is basically facing a lot of challenges because sometimes the contents of the portfolio is quite different from what you like. So it's really those are one of the, I think, challenges that I faced. But I'm happy to say that I think we're able to successfully been able um, to improve the performance of our fund.
Okay, I just remembered you mentioned that the SALEF, the Save and Learn Equity Fund, is more on the blue chips.
Yes.
Between blue chips or growth stocks, do you think which one do you think would perform better after this crisis?
Oh, I think looking
And
at,
why?
yeah, a big portion of the performance of the market is basically being dictated by foreign funds. Um, okay, and if you are basically, let's say, if you're looking at a recovery starting, let's say, by second half, then if foreign investors will start to come in, then they will start to look at the bigger ones, and that's where SALEF is being positioned. So once the big ones have started to run and enjoy a substantial return, then people will start to look at the growth names. And I think, admittedly, while the SALEF may perform ahead, but eventually, in terms of return, the growth stocks return would be higher because, first of all, a big number of these names are, in terms of liquidity, it's they're smaller. So therefore, once there's demand comes in into the stock, then the rate of appreciation is higher than, let's say, a blue chip name. So in
So
terms
for
of return, yeah.
Go ahead,
So
go
in
ahead,
terms
sorry.
of return, sorry. So in terms of return, the consumer fund may outperform SALEF in the long run. But initially,
Mm.
SALEF will enjoy the initial outperformance.
So I guess that's also where diversification should come in. For
Yes,
your emergency fund, you can put in the money market fund, right? And then
yes,
for
yes, that is correct.
stability, the bond fund, like you mentioned. And then for your funds that you wouldn't need in the next 5 years or more, you can put some in the SALEF, the equity fund, and some in the consumer index fund. So the SALEF may perform better in the short run, maybe next year upon recovery, like you mentioned, since they would be the recipients of the foreign money. But in the longer term, the consumer index, is that, did I get it correctly, would
Yes,
really
the
be
consumer fund.
outperforming as well.
Yes, yes, that's correct. Because the Philippine economy is basically historically it's dependent on consumption. About 60-70% of our GDP is basically coming from household expenditure. So the consumer fund are basically cater to that segment.
Mhm.
So
So this is
as
just a bump on the road.
yes, yes. So if consumer confidence returns, then these companies will basically benefit from that surge.
That's actually comforting to know, especially for investors who are a bit jittery during this
Yes.
time. So, Edser, as we close, can you briefly describe FAMI's investment process and your decision making as a fund manager? How is it different from other funds or other fund managers out there?
Um, well, to be honest, I don't have some sort of any idea on the investment process of the other funds. But in our case, what we do is we do a top-down approach. First of all, we look at the market, we look at the overall macro, not only here in the Philippines, but also
From the
across.
economy, top down.
Yes, yes. Not only in the domestic market, but also outside. Because right now, while as I mentioned, while a big portion of our economy is still a domestic consumption driven, but our market is also being dictated by the events outside. So that's where we start. We look at first at the macro, not only here in the domestic, but also in globally. Then after that, we identify which sectors that will benefit from our macro findings. Then we'll make a decision from each sector which company should we be looking. So that's basically our thought process. And aside from that, we also have a very strong or very supportive investment committee, which they also share their views. Because the members of our investment committee comes from a varied degree of their level of expertise experience. So they provide us with a lot of insight of what's happening in every sector.
See, that's good to know. So, for those of you who don't want the heartache of the ups and downs of the stock market, you can rely on experts like Edser and the FAMI team to do the buying and selling for you. So all you need to do is choose the right fund that fits your risk appetite, your horizon, and let them do their job, right, Edser? That's
Yes,
basically
correct.
what you do, maybe
Yeah.
even at night when you monitor the US or the European markets. So I hope we have more time, but for those who still want to pick Edser's brain, he graciously offered to answer more of your questions after this interview. Just send them in through the comment section with the hashtag #ChooseFamily, and Edser will answer 10 of the most interesting questions that you have about this webcast or whatever question you have in mind. And those 10 that will be chosen will receive a special prize. So you will get Grab vouchers worth 100 pesos each, valid until July 14, 2020. So if you don't have Grab in your area, you can just give it to a friend or a relative. So it's transferable. So we'll be waiting for your questions. Don't forget the hashtag #ChooseFamily and make your post public so we can see them. So after this webcast, make sure to follow FAMI's YouTube channel for exclusive and informative videos like this one. So Edser, before we end, do you have any last words for our viewers?
I think my parting word will be for every volatility, there's always an opportunity.
That's great. That's very appropriate right now. So, and with that, that's a wrap, everyone. Thank you, Edser, for the opportunity to talk with you. And thank you as well to all our viewers. And we hope you were able to gain some insights from our conversation with FAMI's head of investment and research. If you want to know how to invest in FAMI and all the other mutual funds on FundSmart, you may visit our website at www.firstmetrosec.com.ph for more information. And don't forget to like First Metro Assets Facebook page through www.facebook.com/FirstMetroAssets. So once again, this is Vanessa of First Metro Sec, and thank you for watching. Back to you, Kara.
Thank you, Ms. Van, and again to Sir Edser for that insightful discourse. I'm sure our viewers of the First Take were able to gain learnings that they can apply in their own investing journey amidst the COVID-19 crisis. Again, please do take part in FAMI's promo. Just simply comment a question for Sir Edser with the hashtag #ChooseFAMI down below, and make sure to follow FAMI's YouTube channel. You can find the link in the video's description box. So the 10 best questions we will receive from askers who also have followed FAMI's YouTube channel, we will be checking, by the way, will qualify for a 100 peso worth of Grab voucher valid until July 14, 2020. For our viewers, thank you again for watching. Please don't forget to like and share this video, which is full of insights on the market. Like our page here on Facebook, follow us on Instagram, Twitter, and YouTube for more content like this one. Check out our upcoming events posted on our website at www.firstmetrosec.com.ph and through our social media accounts. And that is it. Thank you so much for spending the time to watch this First Take, and we hope to see you on the next runs. This has been Kara along with Miss Vanessa, Sir Edser, and the rest of the First Metro Sec and FAMI teams wishing you well. Please stay safe, stay healthy, and stay at home. As always, with First Metro Securities, it's #YourFutureFirst.